All right, everyone. These are directional gaps. These gaps are formed as we take three candle swing highs or three candle swing lows. The candle that pushes above and closes above that three candle swing high, in this case, is going to be our directional gap candidate. When we have a low, a candle, and then, or a high, an up candle, and a low, the distance between them is your directional gap. It is because this is the candle that took the three candle swing high. That's why we don't look for gaps all over the place. We look for the most important ones, which is the ones that can show us the direction. So the key levels associated with the directional gap are going to be the low and the high of the gap, the 3-bar high or low that we close above or below, because that can be a sensitive price level. And then always the EQ of our range. So how do we trade this? If we are looking for a continuation trade, we want to trade back into the gap. We prefer no closes below the equilibrium, and we can wick any of these key levels. Now, another key level from a previous teaching is this. This, putting it together, is our order block candidate. So we can wick all the way down here and grab orders, but we don't want candle bodies to close this gap in, because this is our order block candidate. And if we close this in, then we shift market structure. If we get a down candle inside of this gap, then if we're not ready to take the trade after the wicks are closing and failing to close below, we can wait for order flow to continue, which is in a bullish gap, we get a down candle where its high or its opening price gets closed above, signifying we're running back on buy side delivery. And then we just wait for the pullback inside of our balanced price range. Down candle, up candle. We can come back to the equilibrium, the high. All of those key levels are the same. The important part is we've confirmed the direction back to the upside. So wherever our target or a key level has been up here, now we have directional confirmation from a lower time frame. Say this is the 5-minute and this is a 1-hour key level, that we're heading in that direction to most likely hit it. If we close below with a down candle and we close in our gap, then the market structure has shifted. If we close below our order block candidate, which I'll put that in there for you. Or if it's spelled wrong. We close below that as well. Now we've closed below our directional gap, signifying a market structure shift. We've closed below our order block. So at that point in time, we can look to the key levels associated with that, which is going to be pretty much the same thing. And then we can sell from that range. That's how we read a directional gap. If we get candle bodies, down candle bodies closing all the way down here, that's not preferred. The wick can do all the damage, taking all of these levels. But as long as we're still not closing below that low and that low, this is still valid. We wait for the same thing. Close back above, down candles, highs, and we go. If we have up candles, lows being closed below like this, that's not bullish. That's bearish momentum, bearish order flow. And then we look to take the trade in the opposite direction. So any time frame you're looking at this type of structure, you're following the same things: order flow and confirmation of direction. See what we can find here. So this one jumps out, 3 candle swing high here. There's a few of them. We've also got liquidity, 3 candle swing high. That is failure swing that we're going to go over in another video. But these are key levels inside of this directional gap. So this is our low. Once we get back in here, we're going to read this key level like we read everything else. Are we closing below it? Are we wicking? What are we doing at that key level, and what are we doing inside of this gap? In this case, we wick it. This down candle, high gets taken and closed above, signifying we're back into bullish delivery. And then we continue to go up. So this high is our first target. Well, on this time frame, there's a lot of targets on lower time frames, but this high being closed above, since this high didn't produce a swing that took out any lows, is going to be my next target, because we have a directional gap right here. It got nowhere near the equilibrium, and we are already changing order flow. So that means we're significantly bullish. I don't want to spend too long on it, but let's go to a lower time frame really quick. Let's see what we can find. That didn't really produce a gap. We can't swing those. So since the 1 hour after this closes is signifying bullish delivery, this is a swing low here. This is a very large one, but this is still a gap. So once this bullish or bearish directional gap gets closed above here, we're looking for this to buy, because we've already confirmed our direction on that 1 hour time frame. So the 5 minute, we're looking for confirmations to buy in. Since this is an inverse gap, once we close above here, we're looking to buy in this area. If you notice here, we've got a 3 candle swing high. We've got a gap that closes above it. So inside of this gap here, we're looking for bullish movement. We trade inside. The wicks are staying above 50%, and we are continuing bullish order flow. This confirms more direction. We come back inside to our directional gap. Down candles high being closed above here, signifying bullish expansions. Since we're looking for bullish runs, 3 candle swing high. Now we've got our directional gap. See how these wicks are going all the way down here? They're hitting previous 3 candle swing lows. These are always referenced, but the important thing here is the wicks are just taking stops, and we're accumulating longs below. And like in a previous video, we've got our expansion block here. These are the key levels to look for. This is our order block candidate, along with our confirmation of the buy program. Yeah, it's all starting to come together. We wick that, we accumulate more orders. We don't shift the market. Down candles high and opening price or opening price closed above. You can use that or the high. And then we continue. 3 candles swing low. Directional gap. If we're selling, we're not going to close above here. We close above. Why does it do that? Because the 1 hour time frame is running on buy side liquidity. So when I've said before in previous lives, if we're bullish on the hourly time frame, setups will form in the bullish direction. Setups will fail bearish. So when you say, well, these gaps are forming everywhere, what do we look for? That's where we derive everything from the higher time frame and from market structure. So bearish directional gap failed, bullish directional gap does not fail. And we continue. So I encourage you to study the charts like this as well. But that's it for that one. We'll see you on the next one.